We're going to look at budgets, also inventory systems, where we look at the periodic inventory system, cost accounting, you know it as manufacturing, and then also VAT. All four of these topics obviously will be in paper 2. When we start with budgets, then we know we are working for the future. None of these amounts are already recorded. This is a planning instrument so that we can, according to what happened in the past, we can plan ahead. A budget is not just putting down figures that we hope for, but it is figures based on what happened in the past. So it's a planning instrument, and we know that it's not yet recorded. That's why we don't have cents in there, because it's not actual amounts, actual transactions that already took place. So it's not recorded, and it is future based. How we plan we will receive money, or our planned income and expenses. If we look at budgets, cash budget. What is a cash budget about? It is about money to be received and paid. Not income and expenses, but money, physical money that we're going to receive and pay in order to plan for the amount of money that we will have in our bank account at the end of a certain period. And then we have the projected statement of comprehensive income, which will project the net profit in future. How much profit are we going to make in future? And this will be about income and expenses for the future in order to calculate our net profit. Very favorite to ask is the debtors collection schedule, where you have to plan ahead how you think or how you plan that your debtors are going to pay you. Obviously, this will again be based on the past experience from our debtors, how they pay us. This is based on credit sales. So in the information given, sometimes they will give you the total sales and they will say that 80% is credit and 20% is cash. But you are looking for the credit sales. And we know that the total sales equals cash sales plus the credit sales. Sometimes they will give you the cash sales and they will give you the percentage. Then you can calculate the credit sales. But know that you are looking for the credit sales. Then be on the lookout for discount allowed. If we allow discount for the debtors when they come and pay us, then we know, for example, a 5% discount, we do our calculation and then we multiply by 95%. Or you can obviously do your calculation and then just say minus the 5% that we are going to receive, because discount is not going to be received. And then very important, you have to read very carefully. You get percentages for credit sales, cash sales, purchases. You get the markup percentage. You get discount allowed, discount received, different percentages. How we are going to pay our debtors, or our debtors, how they're going to pay us. How much in the month or in the month following. That's a big difference. So read carefully. Read it over and over again before you start. Together with that, we have the creditors payment schedule, and we know that this will be based on credit purchases. So again, in the information given, you are looking for credit purchases. And we know that cost of sales will be equal to the total purchases, unless sometimes they do give you the purchases. Then obviously you use that. But if they don't give you any purchases, you know you calculate the cost of sales. And that is why they give you the markup percentage. Because they will also tell you that we replace stock. As we sell stock, we will replace it in the same month. So the cost price of what we sold, cost of sales, will be our purchases, because we replace our sales. So calculate your cost of sales, Remember, that will be the cost of sales of your total sales, not just your credit sales, because we want to replace everything irrespective of whether we sold it cash or on credit. So cost of sales will be the cost of sales of your total sales. And then you have your total purchases, and then again, sometimes they will tell you that all purchases are on credit, or again, you can have a percentage, a 60%, 40%, or whatever they give you. And then we will also have the discount allowed that we must take into account, or discount received in this case. And then yet again, read carefully, especially between the debtors and the creditors. Read your information. When we get to calculations, there are 3 calculations that we see often. When you have to calculate the profit markup. Now, the profit markup is where you buy something at 100, you add the percentage markup, and then you get the selling price. You've been working with this always, but sometimes you don't realize that this is the markup percentage. And how do we calculate that? Sales minus cost of sales, and we know that will give us the gross profit. Sales minus cost of sales is gross profit, and we divide by cost of sales times 100 in order to get a percentage. The next one is where they ask you to calculate a percentage increase or decrease. The first thing you do is you calculate the difference between the old amount and the new amount. And then you divide by the old amount. And this is often where you get stuck. You don't know when to divide by the old amount or the new amount. Say, for instance, it was a 4,000 and the old amount was 3,000. So it moved from 3,000 to a 4,000. So there's 1,000 difference. So it will be 1,000 divided by 3,000, because we want to see what is the increase or the decrease from the original amount. So the difference divided by the old amount. If we moved from the 3,000 to the 4,000, the 3,000 was the first one. And then we get the percentage increase or decrease. Then the third calculation, where you have to calculate the total loan or the total fixed deposit amount. But they don't say anything on that. They don't give you any information, but they do give you the interest. Then you take the interest amount, you multiply that by 12, because an interest rate is always given for a year. But in the budget, it's only per month. So you have to multiply by 12 to get the annual amount, and then you multiply by 100, divide by the interest given, interest rate, and then you will get the total loan. Sometimes they will tell you that the loan increased or decreased, and you must calculate that amount. If you think about this logically, if you take the amount of the loan and you multiply that by, say, 6%, and for 1 month, say that was 444 Rand. That was the interest. This is an amount. So we know the interest that we paid for a month at 6% per annum is 444 Rand. Now, how do you solve X? Because you want to know, you want to calculate the original amount of the loan. Then you will say X will be equal to the 444, the interest amount, times 100 on 6. In order to get rid of this, you multiply by 100 on 6. What you do on this side, you have to do on the other side. And you multiply by 12 on 1. Same principle. We want to get rid of that 1 on 12, multiply by 12 on 1. What you do on the one side is what you do on the other side. And there is the 444 times 12 on 1, or just by times 12, times 100 on the interest rate, the 6% or the 8%. Okay, so that is where that comes from, is by solving this equation. Remember that one. It's always very handy to know that one. Formats, obviously you have to know your formats, and that is study work. You have to study that. You don't have to understand, you must study that. It's time spending on this. If you look at the cash budget, we have the total receipts minus total payments, which will give you the surplus, or if the payments are going to be more than the receipts, then we're going to have a deficit. Then that surplus or deficit plus the opening balance of our bank, that is what we refer to by opening balance, will be equal to the closing balance of the bank. And that is what the purpose of this cash budget is. We want to project the bank balance in future. The projected statement of comprehensive income, the format is exactly the same as for the normal statement, with the only difference, it will not be for a year, but it will be for 3 months or 6 months, or how long the budget period may be. Okay, we're going to look at activity 2. If you look in your activities book on page 6 and 7, we're going to do that activity, and in your answer book it will be on page 3 and page 4. The first question they ask us here is, explain the purpose of drawing up a monthly budget. And now they're actually referring here to a cash budget. Why do we prepare a cash budget? First thing, it's a plan. And so that is for the future. That shows projected or anticipated or estimated receipts and payments, not income and expenses, because it is a cash budget that we are referring to. And that will be for a specific month or a specific period, for 3 months or for 6 months. The next question, they ask us to complete the debtors collection schedule. On this side we have the months, the credit sales for that specific month. And here we have the budget months, June and July. Now they gave us the credit sales for April, they gave us the credit sales for May. So this is the first thing that we need to calculate, the credit sales for June. So that's the information that we are looking for. If we go down, information A, actual versus budgeted figures. And there's our total sales for April, May, June. So we know that the sales, remember the total sales for June will be 192,000. But now we're looking for the credit sales. And here under information B, they tell us that 80% of all sales are on credit. So if I calculate 80% of the 192,000, then I will get the credit sales. If I calculate 20% of that, then I will get the cash sales. Then they also tell us how the debtors will settle their debts. Obviously, this will be based on what they did in the past. 60% in the month. So, in the month following. If the word following wasn't there, it made a difference. 60% in the month following the month of sales. So that is 30 days. So there we have to read very carefully. If it says 60% in the month of sales, then we know it's in the same month. But now the first 60% we are going to receive in the month following the sales. And then 36% in the second month, 4% will be written off as bad debts. Obviously, bad debts, not a cash item. It will not be shown in the cash budget. So when we do the debtors collection, we have the credit sales for June, 192,000 times 80%, and then we can calculate the amounts to be received. 192,000, of which 80% will be on credit. And if we calculate that, then we get the credit sales 153,600. How are we going to receive? They said 60% in the month following and then 36% after that. So the credit sales for April, we will receive 60% in May, in June the 36. May, credit sales for May, in June we will receive 60% and in July 36. June, we will receive 60% in July. So once you've written that down for yourself, then you can just calculate 36% of 144. That block stays open. There's nothing there because after the second month we will be writing off the rest as irrecoverable. So there will be nothing, and obviously there will be nothing because this is June and we don't predict that we're going to receive anything during June. So if we do the calculations for June, we will receive 51,840, May 80,640, and then the 36%, 4,838,4, and then for July 92,160. And then we just calculate the total amount that we predict or estimate that we will receive from our debtors for June and July, and these two figures will be shown on the cash budget itself. The next question they ask us is we must calculate the amount payable to creditors for July. So somewhere they must tell us how we pay our creditors. So we go back to our information. Information C tells us that the business sells merchandise at cost price plus 60%. Stock is replaced on a monthly basis to maintain a fixed base stock level. That means as we sell, we replace. And all purchases are on credit. And then we will pay after 30 days. So that will be the next month, the month following. And then we will receive a 5% discount. The question was, we must calculate the payment to creditors for July. So how much will we pay our creditors in July? If we pay our creditors after 30 days, it means we must start with a sales figure of June. The June purchases will be paid in July. So we must calculate the cost of sales for June. Remember we said on the slides, if they don't give us the purchases, then we have to calculate the cost of sales. So the cost of sales for June will give us the purchases for June. And everything is on credit. That will be paid in July and we will receive a 5% discount. So if we write that down, we start. The important thing is where to start. We start with 192,000. That was the total sales. Markup percentage is 60%. So by multiplying by 100 on 160, we have the cost price. So this is how much we purchase. But we are going to receive a 5% discount. So we are only going to pay 95% in order to give us 114,000. So that is how much we're going to pay our creditors in July. So now we can put those amounts on the cash budget because that is the next thing we have to do. Receipts from debtors. These will be method marks because you've already completed the debtors collection schedule. Now we just have to write in those amounts. We also calculated payment to creditors, 114,000. The next amount, cash sales for July. We know that cash sales equals 20% of the total sales. And they gave us the total sales for July as 156,000. And of that, 20% will be cash in July, 31,200. And now once you're here, you've done the most difficult part of the cash budget by doing cash sales, receipts from debtors, if we had cash purchases, and then also the payment to creditors. Now instead of working on your cash budget, go back to your information and work through the information from the top to the bottom to make sure you cover everything. Just to show you where we got that 156,000 from, the July sales, 156,000, and then we calculated the cost of sales for that. Okay, so we're done with information B, we're done with information C. Information D. Operating expenses amount to 90,000, important read annually, and are paid equal monthly installments. So if we pay 90,000 for the year, then for a month we have to divide by 12. So if we go down to the cash budget, operating expenses, 90,000 per annum, but we are interested in the monthly amount, 7,500. It will be spread evenly over the year. So we're done with information D. Information E, new equipment of 84,000 will be purchased during July. So we're going to purchase new equipment in July, and we're going to pay a 50% deposit in cash. The rest in August. But August is not part of our budget period, so that will be the next month. The monthly insurance on the value of the equipment will be 724 Rand, and that will be paid in advance on the first day of the month. So this will all be happening in July, because in July we purchase, we pay the 50%, and we will pay the insurance. Now if you look at the cash budget, they already put in some information for us, but then under payments you will see purchase of equipment and the insurance of equipment. If that was not there, then you had to add those two. The equipment that we're going to buy, 84,000, but we're only going to pay a 50% deposit in July, which will give you the 42,000. And then the insurance will be paid from the start when we bought that, 724 Rand. So we're done with that one. Information F. Water and electricity amount to 4,000 Rand per month. So it's already per month, but it will increase by 10% in July. So for June it will be a 4,000, and July, if we calculate 10% of that, it's 400 Rand, so 4,000 plus 400 for July. Water and electricity, they gave us June, so July will be 4,400. The 4,000 plus 10%, and 10% is 400 Rand. So we're done with that one, with F. G is about the salary and the wages. The salary of the manager will increase by 8% on the 1st of July. So in July there will be an increase of 8% for the salary. Then there's a new shop assistant will be employed. Remember, will be, this is all in future. Will be employed from the 1st of July at a wage equivalent to 80% of the amount each existing worker is paid. If we look at the information on the cash budget, then we will see salaries, they didn't give us anything, and wages, they just gave us a total, 18,000. Now they say the new employee will receive 80% of the amount each existing worker is paid. The salary of the manager will increase by 8%, but they didn't give us anything else. They didn't give us the original. So somewhere there must be information. And if we move up to this table, we see there they gave us the manager's salary, 14,000. It will be 14,000 for June, and in July it's going to increase with the 8%. Then for the wages, there we have the piece of information that we're looking for. 3 shop assistants. So the 18,000 is for 3 people. So that means it's 6,000 rand per person. 18,000 divided by 3, 6,000. And then we can work from that. Okay, so if we go down to the cash budget, salaries, for June, it will still be 14,000. And then for July, there's going to be an increase of 8%. So you multiply by 108 and divide by 100 in order to get your 15,120. You can also say 14,000 plus 8%, the same as we did here. This is just another way of doing your calculation. Then the wages, they said the new worker is going to receive a wage 80% of the amount that each existing worker earns. So the wages we saw is 18,000. It's given to us there, but that is for 3 workers. So the 18,000 divided by 3 will give us 6,000. 80% of that is what the new worker will be receiving. So in July, we will still pay the 18,000 for the 3 workers that we have, plus the 4,800 to give us 22,800 for the wages for July. Information H, the owner is planning an overseas holiday during July, and he will then withdraw 35,000 for personal use. And this is 15,000 more than his usual monthly drawings. So if he is taking 35,000 in July and it's 15 more than usual, then obviously normally 35 minus 15, his cash drawings will be 20,000. So drawings will be at 20,000. And then for July, they said, will be 35,000. That figure was given. So if the 35,000 is 15,000 more than what they normally receive, or that he takes. So we're done with H, almost there. Number I, the fixed deposit of 70,000. Here we are lucky. They give us the fixed deposit amount. Will mature on the 30th of June 2018. And interest of 6% per annum is deposited into our bank account of the business monthly. They tell us the interest is not capitalized, so we receive the interest monthly. Now this sometimes confuses you, the 30th of June. Then you think, well, isn't this July? It's so close to July, but if your birthday is on the 30th of June, your birthday will be in June. Not in July because it's close to July. So 30th of June is still June. So the fixed deposit, 70,000, that will mature in June, 70,000. and then the interest on that fixed deposit, 70,000 at the interest rate of 6%, and it is for 1 month, and then we will receive 350 Rand in June for that interest. Commission income of 350 is expected to be received on the 15th of June. Commission income in June, 350. An easy one there. Then number K, depreciation amounts to 12,000 Rand for the year. And when you see this, then the red lights must go on. Depreciation is not a cash item. Therefore, it will not go into the cash budget. It can be that they even leave a line open for you under payments, an extra line, to give you the opportunity to put that depreciation in there, to see whether you know it must not go in there. Depreciation, discount received, discount allowed, bad debts, not cash received or paid, so we ignore that one. And then they tell us that the favorable bank balance on the 31st of May, that's not part of our budget period. And this is actually the only real amount on the cash budget. At the end of May, beginning of June, we have 47,870 Rand in our bank account. So that's an actual figure that we really have in our bank. Now, once we're here, then we know we've covered everything because we've ticked off all the information boxes, and now we can just complete the cash budget. For June, the total receipts 241,580. For July, 171,744. Total payments for June will be 163,250, and for July 241,544. Total receipts minus the total payments will give me a surplus of 78,330. 241 minus 163. Closing balance 78 plus the 47 that we had, 126,200. And then we know that that 126,200 that we end with in June will be the opening for July. Then we do the same thing for July. Receipts minus payments. And now we see that that will be a deficit. We plan to receive 171,000, but we're going to pay 240, so we're going to have a shortfall of 6,980. And if you do the calculation, shortfall, but we're going to start with a positive 126,200, so then we will end with a 56,400 in our bank account. Not yet received, but that is what we plan, what we estimate will be in our bank balance. That in short is then cash budgets. Remember, you must also be able to do the projected statement of comprehensive income. You must also be able to analyze figures on that. And I hope this helped you with your preparation for cash budgets.